Hey guys, how are you? Yep, just a quick check-in. We're on channel. I spoke a bit about CCL and a number of equities. Timing was a bit unlucky because we'd made some good progress on them and they were at relative lows, and we got a bit of a reflation when Trump called off all the China trade war stuff, and they took their foot a little bit off the throat of that aggressive period. And the equity markets actually during that period, just post those YouTubes, had a bit of a rally. But just regarding the equities, because I did a YouTube on CCL and Wells Fargo, and it's overdue a follow-up now. This was the one when we had actually called down in the 20s for it to run through the 46s, an 80% move. That was 7 months ago when that target was made to the upside. And then more recently, we called it in the opposite direction short. So this was us here talking about it. Trade number 3, Carnival. Mentioned also the fact that gas that they burn is going to have to change. This was the YouTube Carnival and the WFC. Korean won is an FX one. We'll get back to that later. Very, very strong on the Asian currency collapse. But let's talk about CCL and WFC. That was Wells Fargo as a follow-up. So I'm going to the charts, and those were the YouTubes that were referenced. So this is Carnival. Now, when we were first talking about it, it was around here. And in actual fact, it had quite a meaty rise into revisited our funnel levels, basically, in terms of our jaws. So if I just pull a bit more of the history in here, in essence, we're trading a continuation pattern that is from here, but there's actually a far bigger element to this. If I take this out, all these trades had big time frames on their side. So even if you were unlucky in terms of getting in terms of timing overall, the position and how they set up were largely pretty bearish. So real quick recap, and I'll maybe even need to do monthly. Now we'll just get by with a weekly. That was the original upside structure that we traded across here. Whoops, let's just get back into draw mode. Sorry, moving the chart around. There we go. That was the original structure that gave us the call that we said you were going to come out up top here. That's utilizing HVF method. This is how you could, it's an investment play in this sense, because this was a weekly chart. Each candle is a week. It's almost worth seeing on the monthly, because this is so much detail and granularity. So this is something where you could just invest and maybe have a small amount of leverage or take call options, etc., and could have done. So that was going in on the bull side. So we're not just haters, we're not just shorters, we trade whichever way the market is indicating for us to go. After that, bringing you into the here and now, and I'm going to drop it down the time frame as well. It subsequently had a very, very ugly piece of price action that has been setting up downside continuations and sell-offs. Now, some of you might also be aware that in the UK, and it affects Europe quite broadly, Thomas Cook turned its toes up since. Now, I think it might have led to initially a bit of a bump for Carnival, but overall, I think the industry is very weak. And we pointed to this. We pointed that travel is weak. We've said the retail and the individual, the man in the street, is not strong at all. So again, if I give you a quick peek, you can see we actually got first set up structure at one point up top here. That gives you overperformance, zig, zig, zigzag, and down you go. Another structure set up all the way down. So you can get a small idea of the charting that we actually get into and that we're doing here. And I was pointing also to this broadening pattern as well, going back to the draw mode. And we had one more pivot, because when I spoke, it was in and around near the lows, and it went another visit up. And you get the usual comments, oh, your short call and it's just done, it's just gone up. And as I was saying there, we had a reflation in equities and this whole chilling back of the whole China narrative, which had helped create weakness in the equities. But subsequently, you spill out of what is we call a broadening megaphone structure pattern. So the targets that we've given for this still hold, and this trade is now rolling over. It's again at a relative low point. It's actually at a key point. So now is not necessarily the moment to run in, just like the last time we checked in as it was at a low point with you is. But we have made the target now of the HVF, which we called for at 38.4. But we also said there is potentially more to play for. So I wouldn't chase in now. It's going to gestate for a while. It's going to possibly even push back up for a while. But keep it on your list for potential head and shoulder structures. In other words, we've created a lot of head and shoulder structure along the way, and we've drawn two. One as far, I believe, as 16 and one at 24.23. So the overall bear bias has not gone away on Carnival. However, now would not be the time to enter short as a result of target just being made on our HVF structure. So you're getting a little bit of an idea of some of those calls. And we were right down at the 15 level for where we expected the one target potential, and the other one around the 24s. And those were head and shoulder structures that were made with this high that was part of the upside HVF on the upside, which had a target round about there. And since then we've had this convex type price behavior with lots of continuation patterns and broadening patterns on the way down. So this is the kind of work we do. So if you want to be part of this, and I gave this in our newsletter, if you're not on our newsletter, go register on the site. Register on the site, grab the mini series, go watch a webinar. If you'd like to have a talk about what it is we do, pop on there. We do equities, we do cryptos, we do FX, as you can see. So this was CCL, and this is how it's rolling, and it is now substantially lower and from when we called it. That would have been your entry short, by the way, on just inverted HVF up top there at around 38.39. We went public with you when it was in the 34 zone, and now you've traded to the 30 for that target. So what I suspect will happen, a little bit of pushback, a little bit of churn, but then longer run, you might be able to pick it up if you want to trade, and you get some additional new structure that is of a reversal nature, maybe a mini head and shoulders you can get in short higher up, and trade it for one of these targets lower down. Okay, so that's a little bit about Carnival. The other one I did that also had probably the strongest reflation. We were near the relative low. We'd been short earlier and higher up, so it's difficult for guys that are coming in later. You know, my premium guys get the trade ideas first. And that's how it is. But this overall aspect of, again, this particular equity is bearish. Financials, I'm very bearish. Financials with exposure to the car markets, bearish cars, subprime cars, all of this. I'm really, really concerned for what's happening there. As you can see, again, to give you an idea of some of the drawing, this is a larger macro head and shoulders. And you've already had what we call a monarch head and shoulders, which is the one on the inside and the highest. That is an HVF specific terminology and phrase. There's a lot of technical analysis we've had to come up with because traditional technical analysis is not flawless. So the monarch is there, and you have a very key neckline. And note how you've zigged and zagged in that neckline. You get sold every time you revisit. So this for me is right shoulder structure being formed. Now the monarch is actually part of a larger nestled, and we call this nestling head and shoulders. So that overall is a head, and this is a right shoulder in formation here, and that is a nice big and bulky left shoulder. So you can see how patterns net within each other, and note again this key level of significance. So the right shoulder has been a range trade here for now, until such time as it breaks and stays down. Initially you had falling wedge into there that gave you a nice bounce into there, and note how hard you came back down. So this is where you're at with Wells Fargo. So just because when we did the YouTube and it was on the lower end of this range, somewhere down here, and it did revisit again to the upper end, not invalidated this trade in any way at all. In fact, you're looking at a bank and I did relative assessments for you guys. That has been a lot stronger than Bank of America, relatively, probably without justification. You see, the bell tolls for Wells Fargo. You hear it now. And I just have to say the word, and then the grandfather wants to talk to you. Okay, so that's where we're at with it. Right shoulders in formation. I can't tell you exactly how long it's going to take for formation. Don't chase ever into a trade when you watch. Remember that we've also will have given this to our premium guys far sooner, and we'll be discussing it in our boards a while. They deserve that. They're invested in their learning, and also when we're discussing trade ideas. But it's nice to give you guys an idea of what we're looking at and where we are getting it. And just because we might speak to you at this point does not mean it's a bad trade. As it's at a low. So we had a reflation, but as I've already explained, that's a range. That's a range, and it's a very key level. So longer run, the big macro targets we referred to in those previous clips hold again. And this is being discussed in our sniper circle. So if you want to become part of that on the equity side, we've got some macro mega trades. This is, well, I can't tell you how I feel about the world right now. It's never been this way before, and there are going to be substantial moves. Now, in the newsletter, I'm going to give you the third equity. Now, I did it in the newsletter, and I asked for a number of retweets who never made the target, so you didn't get it. And it turned out the best one of all of them. It never even went up with the whole reflation trade. It just kept selling off. So it had me wishing I'd given you that one as one of the free trades, because some of you might have got in immediately at the relative lows and then not been able to hold and felt disappointed. Remember, timing matters. You always have to look at the context of this. This is PAA. Now, I've put some really out there tweets. If you aren't following me on @TheMarketSniper, you really need to, and you should. Go to Twitter @TheMarketSniper. So occasionally, I can't do a YouTube all the time. It takes long. It has to be finalized. I like doing them. It's not, that's not a complaint, but you've got to have a bit to say. You've got to do a bit of planning. Sometimes you've got to have done your draws and everything. Sometimes I just see something and it's easy and quick to put out. We've already shared it internally, but I'm prepared to let it go out, free view, and you can be part of that. @TheMarketSniper for equity and FX. @TheCryptoSniper for crypto. Simple as that. And if you like the politics and the crazy and the whole reset stuff, @TheResetSniper. So it's either. It's always and it's always sniper, and then in the middle, you just put in crypto, market, or reset. Okay. Anyway, so PAA was one, and we were actually short up top here on the second visit. This is one of the best. So I've told repeatedly my premium guys, those that want it have taken it, and a number of them are in it. And this is Plains All American Pipeline. So I'm bearish oil. I'm pretty bearish oil. I even said on Twitter that there is a freakish chance that is higher than you would expect of sub $10 oil, even sub $4 oil. How insane is it to say something like that? You guys are going to be saying, but, you can't make money at $4, da. It's not about making money. It's QE, buddy. It's how these guys do QE. It can happen. Most people would put sub $4 oil at a 0.1%, maybe a 1% or a 2% or a 5%. If I walked around a room, it would be all of that, fractions of percent or sub. I am saying to you, not that it's high probability, which would mean 51%, more likely than not, but I'm saying to you it's far higher than most people would value it. So if I think it's 18 or 20%, that is significantly higher than people that think it's 1 or 2%. That doesn't mean it's going to happen. So don't come and say, you never got your $4 oil. But I have a feeling this is how the guys are quantitative easing at the moment. Fracking is a non-economic oil extraction process. It's selling $10 notes to people and accepting $5 for them. It's just not the kind of business that's very sustainable in the long run, unless of course you've got government and a banking cartel that are going to keep doing it because they have to flood the world with oil, because they want to keep pressure on Russia not making too much money, Iran not making too much money, Syria, it was then Libya, because Obama was the one who gave all the licenses, all this green talk, isn't that funny? And of course Venezuela as well, during their period, so that they could bring all these respective countries to their knees and dominate them. Energy is the global tax. If we are so weak, as I believe we are, we're this another double dip recession in this Great Depression that we're in. It's a tax on everything. Retail is being hammered. I'm seeing it across the board where we're going. There isn't that much power generally anywhere globally in the world, and I think the East are even more exposed on the FX side, Korean won and all that, separate discussion. So what could happen is quantitative easing could be done on really low price oil, because oil is in everything. It's like a global tax. It's a Rockefeller global extraction tax. So think of it like that. They may have to drop it super, super low because everybody's bleeding, people are losing their jobs, etc., to try keep travel, business, things moving, and products. Anyway, the call that we made on this structure, so the overall draw of this is a continuation downside pattern, believe it or not, is sub $3, and we were shorting it at the 24.5s here in these 2 points. You've got a lovely little period where they double tops. I'll give you a small little insight into the draws that we do there. Watch quickly and grab the idea for yourself. This was in our newsletter. In fact, that I find that here's where it is. You can check our newsletter out. This is what you would have got. It had the politics in it, it had everything in it, but it also had the two trades. Let's just go here. So this is this whole Greta Thunberg narrative that you would have received for this last month. All the irony of who's behind it, who's saying what, old money, etc. And then at the bottom of this whole notion of capitalism reset. So this is why we're the reset sniper, the market sniper, and the crypto sniper. They all overlap. The only thing probably not being referenced too much here is crypto, but capitalism time for a reset. The new agenda on this green background paper where they talk about, let's just expand that a little bit for you guys, more taxes, not efficient, the current without change, more painful, time for a reset, the new agenda, note the new world order, the war on terror, the new, anything the war on or the new, etc. agenda. It's very ominous sounding language. Very dominant. You're getting these people in The Economist. You can read in detail about this if you want the legacy. You can see to what reference Karl Marx. I call it the watermelon communism, red of tooth and nail, but wearing this shiny green robe. The Green Party, people like Jill Stein, whose tweets go 1 minute after the CFR's tweets, all referencing the Green New Deal like they're on bots. Anyway, but the two key parts that you're interested in as traders is the PAA weekly. I gave you this. This was essentially a very odd head and shoulder. We only do horizontal necklines. You'll learn why in that at the top. So this is the big macro. You can see the blue line, a key level of significance, and we're giving you a target of 320 down there, and we were shorting up at 24.5, stop at 25. I think you'll be able to go tighter than that now, half that at what I'll give you, and I'll give you a little break so that you can keep your risk reward high. But we're looking for 320. We're talking about a 7:8. You can take puts on this. I've taken puts on this through to 21. I've shorted it on spread bets. I want to actually add more, and I've been hoping for a rally because it's just such a good pattern. And I don't know what the price of oil will be, but when you're a pipeline pushing the commodity down, if the commodity halves and drops really, really low, the amount you can charge for shoving it around drops even more. So it's negatively. We also did an assessment of PAA versus, I can do it with you now, We're getting a alert on the gold silver ratio. That's good to see. Note the alerts here, guys. They're all over the place. Use your alerts on TradingView so you don't miss things. So I'll just, for a bit of fun, I'll show you a little bit of an insight of what we do in our premium community as well. So you do relative valuation, how it performs to its underlying market. In this case, we're talking about US oil, which is Western Texas Intermediate. I don't want the NASDAQ on there. Get out of there, man. There we go. So let's get that there. And then I'll just show you how from the lows, how poorly relatively PAA is done. So you can see the orange level line, and you can see they've moved pretty much in tandem over here. Then oil started to go up. Massive divergence. This just got killed back down. What the hell's going on there? They peak at a high there. Oil's at a new high for this, since this low down here. Let's just call it low 1. Oil's at new highs. You can't even reclaim this equity, can't even get 50% up the way to where it was previously high. Then you get a proper smackdown on the oil. You get a similar smackdown here. You get reflate here, and then you've kind of held a level here on oil. I'm expecting it to break down, and during that period this has just fizzled down. Now it's very, very close to what we call our triggering level now. It's very close, so that would be a just-in-time entry. So where could you put that stop on this trade that we're talking to you about? Well, you could put your stop just above that exhaustive high, because you also had a bit of a double top. Oh, the Labrador's come to visit me. I love him. He's been shorn like a sheep. He looks like a sheep. He's had all his hair shorn. So it's just made a target of a double top. So it may give us a little bump and rally. May give us a little bump and rally, but you could put a short. What's that level for you? Well, you can go have a look at the chart yourself. You should never take a trade without having looked at the chart yourself. This is actually in percentage now because I've got the relative assessment on there, but you can see this is performing less well. So they probably picked up a lot of debt. The prospects aren't looking so good. Green energy now, this is going down like a bucket of sick. During this Greta Thunberg era, they're going to keep pushing the things we should be having. Energy should be virtually free for everybody, barring minor distribution costs. We should all be on solar. We should be all on everything. The tech is there, but they don't want to get rid of that global tax until they've got a new way of extracting it from you. So that's why this green agenda is coming. You know, the planet's about to cease. I'm with Carlin about this. The planet's fine. It's existed 6.5 billion years. Your schmuck and your plastic ain't going to stop it from continuing to exist, but it changes dynamically according to what's going on. It's humanity that's the problem. That doesn't mean I'm for being inefficient, screwing up a beach and leaving plastic. It doesn't mean I'm for, you know, being adverse. Do the little as possible to ruin the environment. We do have a effect, certainly. But anyway, let's not get into the political element. You can enjoy that in that kind of thing in the newsletter. But the trade is the trade. And this is looking really soft. These are 4 very ugly candles. The first 3 are what you'd call 3 black crows. And it's pushed on. And let's just see where it stands on there. The low at that juncture is 1934. And now you are at 1943. You know, very, very close. It would be ideal if it actually just ran that low and then bumped. It could have a little return move because you had this double top right here as a reminder, and then there. So as I've just shown you, that has just made some form of a target. So hopefully you get a little rally back into the funnel. And as I'm saying, you could use that as a stop because that was a return to the neckline. Okay, that's up to you. That's round about the $23, and you might be able to get short a little higher up, maybe above 20. and you can run it 2-3. That's a market cap decimation. We love ballsy macro calls. We're going to be wrong more often. Of course we are. But I'm not interested in being right or wrong. I'm more interested in making money and the big trades where you are truly accurate and you stay net short for a sustained period. The money's made in the sitting. And that's the benefit you guys will potentially reap here. And it's not the kind of thing that I would expect would happen overnight, but it can get most disorderly as well, especially once everyone understands and the economy and all of this is feeling weak, etc., etc. Oh, excuse me. Anyway, so with that, go register, go follow those 3 Twitter profiles. Go follow the Twitter profiles. If you're interested in growing your forward, the reset is coming. It's here and now. There will be a polarizing event. Those that will smack the ball out of the park by seeing it and trading it and move their wealth forward. And it's going to involve crypto. It's going to involve equities. And some of them are going to go up. Some of them are going to go down. There's going to be a major FX woe. The bell tolls for FX there, the Asian FX. And PAA, we're getting the bell confirming. The Godfather says, yes, get short. Okay, you all need a clock like that, don't you? Don't we all? All right, that's it from me. Thanks for watching. We'll catch up with you again. And remember, like, sub, and share, please. I'm not YouTubing as much. I need to get more of the promotion. If you want to hear more from me, you've got to give me more followers. I really do need your support on this. I don't like the nagging. I just don't do that stuff. But the sad fact is it works, and you get the guy that goes all the time, it's like, subscribe, yeah. And I'm like, stuff you, man. Just, okay, I understand. But we need that. We do need that for the support. And if you don't say it, it doesn't happen and you forget to do it. So do that and share it so that we can grow the channel. Then I can keep investing in it. Otherwise, I must just focus on my trading and my premium clients and just do, occasional updates. All right. Thanks for watching. And I hope it's useful and interesting for you. So that is Plains All American being added to the CCL. This was the one I wanted to give you, and it's just kept going down. When we were talking about it, it was over here. It just kept going down. It had a small bump on that Saudi oil thing, and I added some more on the wicks there. So we were lucky because we had to buy a short. So this one you would all be in money for, and you're getting it later. So sorry for that. I chose to, and I wanted a little bit more likes and love from you to give you the third, and then it just kept going. And the others had small rallies, but they are all good to go on the big time frames. But choose your entry moment for yourselves, or be part of the community and see how we do it together. Okay, with that, I'm off. Bye for now, guys. Thank you for watching, and play nice and trade small as well.